Let's talk about prices, because you and I have seen a lot of charts, a lot of data in the last week or so about prices. Now prices are changing. Let's dig into that. But I want to connect that conversation to how investors should act right now, because there's two things that are happening. One is we're getting more and more data about where prices are across the country, as well as different regions in real estate. So where the prices was in August of last year versus August of this year versus September last year versus September this year. And now it's like a data crunching mania out there in order for people to prove whatever point they want to prove in real estate. That may be that the world is falling, so they're crunching data that way. It may be that this is the best opportunity since sliced bread, therefore they're crunching the data that way. But I want to connect where prices are, Patrick. I want to connect that to how investors should be acting given this consistent talk of a recession and how the world is going to fall right in this country with a recession because interest rates are too high.
Well, the term, JG, by the way, is the sky is falling, the world is coming to an end. And There's just no doubt about it. All you have to do is spend a little time on Twitter and you'll get all of that stuff handled. You'll know exactly what's going on in the world. So here's a couple things to consider. Is we're looking at, and what they're not even giving data. I mean, we look at data and they're talking about prices and what the price was in January of this year compared to what it is in September of this year. And of course, it's down 20%. And if you bought a house, I don't know. Did you buy a house that you were only going to own for 6 months? So this is impacting you. Like, what's the effect? And then, of course, raising interest rates. These are all the bad news things. To our, as we look at prices, you compare them to 2021. You have the data there. We know that prices are not down to 19 or to 2021 lows, for example. You still got gains. If we're looking at an investment, if you've got a 5, 7, 10-year horizon, who cares?
Who cares?
There you go. Now you're speaking the truth right there.
Who cares?
I like it.
And in the meantime, what is happening? Rents are increasing because demand is increasing. There's not enough inventory to go around. Immigration is increasing. These are all the things that we talk about all of the time.
I want to show a couple charts and talk about this because the MLS HPI benchmark price, which looks at all of Canada, which we hate that kind of thing. But the point is, Patrick, you can see just about every property category is starting to come down for sure. But there's still lots of gains. Lots of gains have been had here. I mean, you got markets that have grown considerably. And I think that it's, even though these charts and how you look at this chart is very important. If you consider, and if as an investor, when I look at this chart, I don't look at it and I say, okay, if I bought at the tip top of February of 2022, where am I today? Because real estate's not like the stock market. You're not trading in and out of real estate like this unless you're just doing fix and flip. The odds are you're trying to build wealth here, and as part of that includes timeline. Timeline is so important as part of this conversation, Patrick, which means when you look at a chart like this HPI chart, you have to look at what if I bought in 2015? What if I bought in 2017? What if I bought in 2019? What if I bought in 2021? And I aggregate that portfolio. I have friggin' killed it is the answer. The result is just about every case. And I think that investors have to be grounded in that, because as we stretch this chart forward to 2023, 2025, 2030, this will appear like a blip and you won't even notice it.
Yeah, I think the challenge that we face is you've got maybe some new investors who bought in early January 2022 who are going, oh my gosh, I made a mistake. I shouldn't have done that. Of course, we've how many times did we say over the course of the past couple of years that we don't ever stop beating that drum? Buy for cash flow. Be very, very cautious if you're getting into that pre-sale world in the condo market, because these are the things that can happen. You can have these market turns. And so when we look at that, we talk about the speculators who are going to get flushed out in this kind of a market, which then creates opportunities for investors who are savvy, who are looking at the market through a different lens. And, when we look at, and when we talk about the cycle, which we just released, not that long ago, we look at this slump cycle, and most provinces / cities are in that slump cycle. This is the opportunity, folks. The opportunity wasn't in the boom, not that there wasn't opportunities, but this is the true opportunity, is in this slump cycle. And this is where you get to appreciate the gains as we go through the cycle into the recovery, back into the boom. And there's no timelines on that. I'm not saying that's happening in the next month or the next year. What I'm saying is that through this slump cycle, we have time to consider what's going on. We have time to make offers. They don't have to be conditional, or we can put conditional offers in. We can buy really well, and we can also look at what's happening in the regional markets and make decisions to invest in those markets.